Good afternoon, traders and investors. Will back here with another one. It was a very red day in the markets, guys. This was pretty much war headlines coupled with the rise in yields. This is just going non-stop right now. Our longer term yields are approaching 5%, and equity traders seem to be quite nervous about that as bonds keep selling off. And I've been saying for a while, guys, it's going to be tough to get a sustained stock rally without the support of the bonds. But all is not lost. As soon as rates start peaking and Jerome Powell says enough is enough, you will get that bid support in bonds as people go from money market funds on a short-term basis and start investing in these long-term bonds that are paying over 5% for 10, 20, and 30 years at this point, guys. So very red day on the indexes here. We do have a big earnings to go over as well here. Five companies that we're going to go over here, namely Tesla and Netflix. But as a whole, guys, you can see very messy red across the board and big red. So we're going to cover our major indexes today. We're going to cover our earnings that we had today as well, our major tech names to conclude. So guys, let's get into it right away here. SPY down 1.33%, QQQ down 1.31%, guys. And on the heat map, it was very, very, very messy. And even energy here, oil rallying, which is not what you want to see if you are an equity bull as well, right? You don't want to see commodities rallies because that foreshadows that inflation might have a little uptick in terms of energy in the next report here. But all across the board here, guys, very, very negative indeed across the day here. Major tech selling off in a fairly decent way. And on the one-day relative performance, you will see, guys, that everything in the red, but not just in the red, some sectors even by over 2%. And on the one-week relative performance, guys, you can see that now everything pretty much in the red except for defensives and energy. So very, very negative day as a whole, guys. But just before we get into our earnings here, I want to preclude with a little screenshot to show you guys why rising yields are so bad, right? So today we had the 10-year yield come all the way up to 4.92%, all the way up here, right? We're now smashing through all-time highs through levels that we haven't seen in over 15 years. You will see the 20-year yield is now at 5.23%. That's almost close to the Fed's terminal rate for the next year, guys. So long-term yields are approaching our terminal yields for the short term. This is very, very speculative trading on the part of bond traders. It will not last, but for the time being, we do have to wait for this to peak out. And you will see that on the US, on the 30-year yields, as a matter of fact, it is even the same, right? 5% on your 30-year yields, something that has not happened, guys, I can tell you, since all the way back here pretty much in 2007, our last major recession here. So very, very speculative trading by our bond traders here as investors continue to sell off bonds and potentially wait for repricing on bonds to jump in at a later date here. Why is this bad, however? Well, one of the reasons I'll show you right now, right? So here's a little screenshot that I took. The 30-year mortgage today is now 8%. 8%, guys. A few years ago, it was 2-3%, right? For the first time in 23 years, a buyer with 20% down payment on a $400,000 home, which is average, would pay $1,000 more per month than they would have 2 years ago when rates were 3%. $1,000 extra per month, guys, is a big ask, especially for a lot of the population that makes between $50,000 and $70,000 a year. That's almost double the mortgage payment that they would have paid had they bought a home a few years back. So this is why rates are bad. Not only does it run against companies' ability to borrow debt and grow, but it also hurts the consumer in terms of them being able to buy homes, cars, personal loans, potential furniture and whatnot. So that's why the economy is slowing down when you get rates higher. So that's our little excerpts on yields here. Let's jump right into earnings before we tackle major tech here. So our first earning that we have is Netflix. Netflix absolutely smashing it, almost 13% in the after hours here. You can see this massive candle here. They did have a double beat. So we're trading now all the way up to 390, double beat on earnings and beating on revenue here. So what exactly happened? Netflix just had an outstanding quarter because not only did they beat on those two numbers, but they beat on subscribers, which is the main focus for Netflix. Can they increase subscribers with the recent password sharing crackdown? And they have, okay? But also they increased prices. So you can see the company reported a boost in subscriber growth driven by a password sharing crackdown and interest in its new ad supported tier. So Netflix introduced a lower pricing tier that includes ads, and it's been very, very popular contrary to their normal subscription that does not include ads. They also raised prices. So Netflix with some pricing power amidst this macro turmoil here. Very, very good report here. You'll see total memberships expected, 247 million they came in with versus 243 million expected. So very, very good subscriber growth. And you will see here, the company's dominance shown in its pricing power. Netflix says it's keeping its ad tier pricing at $6.99 a month, while its basic and premium services will see a price hike starting Wednesday. Price hike means more revenue, means more earnings and more profit for the company. That's why they had such a massive jump here. The basic plan will now cost $11.99, up from $9.99. It doesn't sound like a lot, guys, but when you have 247 million subscribers, that's a lot of money that you can bring to the bottom line. And the premium will be $22.99, up from $19.99, right? The standard plan will remain at $15.49 a month. So they increased their mid-tier plans here, guys, and that's going to translate to beautiful revenue and beautiful profit for the company. So Netflix deserving of this large price increase in the after hours here. Netflix had a very bad last 5-6 weeks here. So happy to see them come up at least to our moving averages here. Now it will remain to be seen, can they potentially put in a reversal here, reset the weekly uptrend here, and maybe get us going for our monthly lows here into end of 2023 and early 2024. The second earnings that we're going to cover is Tesla, guys. Tesla, what a disaster on the earnings call by Elon, guys. I have not liked Elon's earnings calls for the past 3-4 quarters now. It just seems that he's just very pessimistic and bearish when answering questions. Not about Tesla's direction. He just downplays everything. Instead of being super optimistic, there's just his tone and his attitude towards the whole thing is kind of a little bit pessimistic. And it really shows in the after hours trading here, right? After your earnings release, you had a decent little hold on price here, but as soon as that call got started at 5:30, you can see the call did not go very well. Tesla ending down over 4.5% in the after hours, 4.78 during the day. So that's pretty much 9% drop on Tesla on the day here, coming all the way down into the lower 230 areas, pretty much tagging our 200-day moving average, flushing our weekly support line here, right? So now, unfortunately, potential weekly downtrend for Tesla here, not a very good sign. What exactly happened, guys? Well, they missed. They missed on two things. So number one, they missed on earnings, and they also missed on revenue. This was to be expected. We've been saying it on the channel, guys. They did report lower than expected deliveries because of a Shanghai plant shutdown that lasted longer than expected. So they weren't able to put out and deliver as many cars as expected. So you do have the revenue and earnings drop that did plague them. But what happened here? On the initial earnings release here, people were happy because they said that they were going to start production of the Cybertruck. However, what happened on the earnings call? Elon downplayed it, unfortunately, right? Elon Musk said that Cybertruck production remains on track for later this year with first delivery scheduled for November 30th at Giga Texas. This is very good. However, he then went on to say they tempered financial expectations for the vehicle, saying it's going to require immense work to reach volume production and be cash flow positive at a price that people can't afford. I just want to temper expectations for Cybertruck. It's a great product, but financially, it'll take a year to 18 months before it's a significant positive cash flow contributor, right? So once again, focusing on the negatives is Elon Musk. Very negative as well. And he also said, in terms of a question on the new Tesla production factory in Mexico, it says they're laying the groundwork to begin construction on a new factory plant in Mexico. But Elon Musk said before Tesla goes full tilt on the Mexico factory, the company is working to bring down the prices. He's worried about the higher interest rate environment that he's in and says if interest rates remain higher, they go even higher, it's that much harder for people to buy the car. So I listened to the entire call, guys, and I was not that happy as a Tesla shareholder. I need Elon Musk to be more optimistic. Even though we do have macro headwinds here in the form of higher interest rates, you need to hold it down as the CEO of the company. You need to answer these questions with a positive demeanor and say, even though interest rates are high, we have some tools, we can lower the price of cars. Yes, margins will be impacted, but on our long-term strategy, it will be good. And that's exactly what happened here, guys. You will see the operating margins came down at 7.5%, down significantly from a year ago of 17.2%. So as interest rates are higher, he needs to drop the price of cars so people's monthly payments stay the same. that is what's hurting Tesla right now. Not very good. Once again, Tesla, when rates start coming down, guys, this thing is going to absolutely explode. But in a high rate environment where people can't afford to finance cars and Tesla is forced to reduce prices of cars to give people a chance to buy them, this is what happens. So not a very good look for the stock indeed. Now, third, we do have another company, Las Vegas Sands. Las Vegas Sands, I was looking forward to hearing from them, guys, because this is our casino and entertainment group here. You will see Las Vegas Sands missed ever so tinily on earnings, but beat on revenue here. They actually had a somewhat decent report, guys, here, right? So they reported solid Q3 earnings with net revenue of 2.8 billion. That was very good. What happened, guys, is they had a 30% uptick in revenue in their Macau division. If you guys don't know where that is, it's off the coast of Hong Kong. It's where a lot of people in Asia gamble because gambling is banned in China as a whole. So a lot of people funnel to that little island next to Hong Kong to gamble. And this time around, it was very good for them. So they did say across this whole item, I won't read the entire thing, but they did say that guidance was fairly good. They did see that the consumer continued to spend on entertainment, and they even said that the Las Vegas venues and whatnot were actually very good. So they gave positive outlook and positive guidance. They did reiterate that the consumer is watching their discretionary spending, so they're not able to upsell them with that many things when they are in the casinos, but their hotel rooms do still stay booked. So that's pretty much it for Las Vegas Sands. Las Vegas Sands, in my opinion, on a technical standpoint, guys, they have sold off fairly much here, but I'm not going to try and catch a falling knife here. We are in a nice little weekly downtrend here. I need to see a little reversal process happens, but they're getting into decent territory here, guys. If we trend down to the lower $40 area, I may just be picking up some options here in terms of some short puts to maybe play the options wheel on that. So that's pretty much it for Las Vegas Sands. Now, fourth, we have another company, ASML. If you guys don't know ASML, they manufacture so many wafers, the little parts that are used for semiconductors. They manufacture so many of them for the largest companies of semiconductors in the world here. So they're always a major player in semiconductors to be watching. You will see that they dropped 4% in the day here, as they did have positive earnings here, but a slight miss on revenue. So shares of critical chip firm ASML dropped 4% after US curbs outlook warning. So ASML is not a US company, guys. They are a company based out of the Netherlands. Unfortunately, the Netherlands followed suit, and this whole ban, if you don't know what it is, it's to ban the export of artificial intelligence products and software to China. So a lot of this ban, and China is a very big demand player in terms of their semiconductor chip requirements, right? So this is what's happened. The Dutch firm has also been caught up in the tensions over technology between the US and China because how important its tools are. So this is the main reason, guys, that it came down, but also they reported a profit decline in the third quarter, beat estimates as it's forecast the 2020 revenue will be flat. They're basically saying, guys, that 2024 will be flat in terms of revenue growth, but that 2025 will be their year of explosive growth. So a bit of a transition year next year for ASML. They are positioned well. However, they are in the midst of a very big technical sell-off here. Not my favorite play in semiconductors right now. I do think there are better ones. In my opinion, AMD is one of my highest conviction plays here. Bit rich in terms of the PE ratio for me here right now, and considering the fact that they won't be growing revenue that substantially next year, they may have to take a little year off, and they may just hover between this wide range of about $700 and $450 down here. So that's pretty much it for ASML. I like the company, just not one of my top semiconductor picks. And now lastly, guys, Proctor Gamble. Proctor Gamble, one of our defensive plays here, so we have to talk about them here, right? So they actually had a very good day on earnings. They actually reported better than expected earnings here, and they beat on revenue as well. Procter & Gamble tops earnings revenue estimates as higher prices drive some consumers away. So a bit of a mixed report here. Although they were able to beat on revenue and did raise guidance here, well, they're saying that people are shying away from big brand names like Tide and going to more store brand names, right? Private label names. That was the gist of this earnings report here, but still a decent report here as a whole, right? They refuse to comment on the future direction of pricing. So consumers aren't happy that they've raised prices on a lot of their items in the past 2 years to combat inflation and to keep their profit margins there, right? So although that translated into a volume decline here, Procter & Gamble still is a relatively defensive company, guys, they sell products that you can't really get away from. They own so many brands and they are positioned well here throughout a recession. That's usually how defensive play. They usually play out fairly decent during recession. Company is pretty much positioned well here. I mean, for me to take a position on this, for me to be looking to play the options, it would really have to get back down to like the lower 130, 135 range for me to consider it here. But they are performing well. No red flags per se for the company as a whole, in my opinion here. Solid report, just nothing substantial here, guys. Once again, another company reiterating that the consumer is pivoting to cheaper items instead of going with the brand name stuff. So that's why they weren't able to get a tremendous amount of lift after their earnings. That's pretty much it for all our earnings we had today, guys. Let's go over our indexes and our tech names quickly, as we have lost a few key areas here. Now, SPY, very unfortunate, flushing our lows, 430. We were looking out for this level, flushing the lows. The bears have capitalized, guys. It is a very potential daily downtrend starting here. So that means that your weekly bounce is potentially finished, and the bears may have a second chance to revisit these lows here. If we can't get over this interest rate yield fear, and if big tech and the rest of earnings can't save us here, guys, we are going to start trending down lower to these lows. That was the expected scenario. I was looking for the size of the bounce. The size of this bounce is not high enough for me. The bears remain in control of the weekly, and it looks like they're taking control of the daily at this point too. So we will see if the bulls can save this, but so far not looking so good here, guys. We are going to be looking for a lower high. Anything below 438 here, it's going to be a lower high for potential downside continuation. I need them to get a stop here in the lower 420 area and not come too close to these lows here, guys. I want to see this weekly reversal into the end of the year. We'll see if they can get it done. QQQ as well here. You can't see it too much on the daily, but look at this 4 hour, guys. 4 hour clear downtrend in motion with today. Very, very unfortunate. Rejecting from this trend line, never being able to get back up to it here. So unfortunately, this downtrend just continues. It was a nice little daily uptrend. The daily uptrend, unfortunately now at this point, is losing a lot of steam. We are coming down into a support area here. The lower 360 should be horizontal support below our moving averages now, which is not what you want to see. So on the weekly, guys, we will be looking out for how much of this move can the bulls conserve here, guys. I liked the size of this bounce. Okay, I liked it. They got all the way up to 80%, but if they can't hold it, the bounce means nothing. So I do give the bulls some credit. And if we do have some positive earnings here from the rest of our major tech names, they could indeed save this move into November. That's what I will be looking at, but I don't want the bulls to come down too low here into our 350 areas. Then it is going to get dangerous. So daily downtrend is likely in motion at this point. We will see how much can the bulls play defense here in setting up for a weekly trend reversal here. XLF financials. XLF financials coming down a ton today as well, guys. They got the daily uptrend, weren't able to push much. And in one day, guys, almost 2% down. That's all in relation to your 10-year yields and higher yields, right? So crucial level 32.90 at this point, guys. You lose that, your daily uptrend is lost. We'll be looking for a lower high and daily downtrend continuation here, guys. It's very unfortunate, but financials on the weekly, guys, didn't bounce high enough and close in this area as I wanted them to. The bounce was decent, guys, right? They did get up to 618 level, but just not able to close in that area, getting rejected. So unfortunately, your weekly downtrend looking like it's going to continue. Now you need to see the bulls protect 3220 with their lives if you want to see them create this weekly uptrend in the future here. So bears with an absolute masterfully played day today, coming all the way down to the lows. We'll see if they can translate it into a daily downtrend, and then we'll see, can the bulls protect these weekly lows down here. XLV Healthcare, same concept, right? Daily uptrend they got it, but now unable to push higher, high enough, and now kind of rolling over here, minus 1% day almost on XLV. Crucial area here, 129.26. Lose this and you lose your daily uptrend as well here, guys. And then, similar to the rest, we will be looking for the weekly lower high here. And then can the bulls save your lows here? 127 area. Going to be absolutely crucial in the next few weeks to see if they can save this, potentially set a new weekly uptrend, or if we're going to revisit lower lows here, guys. It is all up the bulls to play defense now on these indexes. IWM Russell never set the daily uptrend here, still stuck in our lower levels, down 2% today after such a nice last few days, guys. Erased it all in one single day of trading. Not what you want to see. So IWM obviously in a bearish downtrend here, right? So weekly downtrend just persists at this point. I'm convinced that we are going to have to come into this area before getting some more massive support by our bulls here. I mean, they can always save it in this area, but it's not looking good, guys. This is looking like a straight bear flag into a potential flush here. If we do start coming down into this area, I will be writing options here, but keep in mind this area is very, very big support, but the bulls are not showing signs of life in our growth stocks here. Very unfortunate. So we will look to potentially see a flush into the lower 160 areas. And if that happens, I will be joining Team Bull here in writing some options and trying to position myself for a potential recovery here into the later part of the year. Now, Dow Jones, lastly, Dow Jones here dropping significantly as well, right? Down almost 1% on the day. Daily uptrend, they got it, but now in jeopardy, right? So they can still save it and set the daily uptrend and continue it here, but not looking good, guys. This was not the day I was looking for today across any index. 33,472 is your low here. Flush this, you lose the daily uptrend, you set up for the daily downtrend. If you get the daily downtrend, guys, you will just have weekly downtrend continuation at this point, right? Size of this bounce wasn't good enough. So now, can the bulls play defense and recapture and set a weekly uptrend into the remainder of the year? That will be crucial here, guys, but I don't like to see it. The bulls still have a chance to keep this going, guys, but if we lose the daily uptrend for any which reason, you look to the weekly lows. We have to protect this to set ourselves up into November and the end of the year on everything. Now let's move into our major tech names. Apple. So Apple here with a negative day as well, down 0.74%. Apple just were looking to protect this area right here, right? Apple earnings in 2 weeks. So the daily uptrend is trying to be solidified by Apple. Now we need to see them bottom out here and start recapturing, start break 182.25. They never set the daily uptrend. This is one daily move. Need to set the daily uptrend here. You'll only get it if they crash 182.41. But if you start retracing here too much, you give the bears a chance to set up the daily downtrend, and you give them a chance to just further the weekly downtrend continuation here and look at these lower 160 levels here for your flush. So I'm going to be keeping an eye on Apple, still positioned fairly well here, if I do say so myself, still reacting nicely from our green box, our sweet spot here, but can the bulls hold this will be crucial. I'd like to see them go kind of sideways into earnings, not lose too much, not come down too much into this area before earnings. I do think Apple should have some fairly decent earnings. We will see here, guys, but never a good look to be under the moving averages at this point. Need to see a bounce from Apple soon. Start getting back into the 180s. If not, your weekly downtrend will just be continuing here, and then you'll be looking to your weekly lows to see can the bulls reverse this, okay? It's the same on everything. AMD dropping again, almost 3%, guys. So now we're getting to a crucial spot, right? 99.26 is your low. Nice daily uptrend. They put in a lot of space, but now the bears have engulfed a lot of this move, guys, right? If you look at the size of this move, guys, the bears have engulfed almost 80% of this up move. That is not what you want to see, guys. It's going to be very tough for the bulls to V-shape this to highs now. The best they can do is aspire to a little two-step and reset this, but the bears have created a lot of space that they can set a daily downtrend again on AMD. And then at that point, we would be looking for our weekly lows here. We got a nice weekly bounce, trying to set up for the weekly trend change. But if the bears come back too much, guys, and start coming down here, well, your weekly downtrend will just unfortunately continue. I am a buyer of AMD down in these lower areas, but the bulls need to start playing defense, guys, on all of these names. It's go time, crucial time for the rest of October. AMD with earnings at the end of October here, so we will see, but I need to see them push back up in the 106, 107 area, create us some space here. I love the company. I love it at these current prices, but I'd like to see them get some sort of fire going, get some sort of momentum to the upside going, because we've been going down for pretty much the last 4.5 months at this point. Now, Amazon giving back as well, 2.5% to the downside. I do expect Amazon in 2 weeks to have some fairly good earnings. As a matter of fact, it's actually next Thursday at this point, right? So should be performing fairly good. But in the meantime, guys, Amazon not immune to general market movements here, coming down once again. Daily uptrend is set. Now looking to set the higher low. Anything above 124.11 is your higher low, but need the bulls to play some defense and come back above, close above 134 and give me a new daily uptrend here. If not, the bears will have the chance to roll Amazon into a weekly downtrend. We haven't had a weekly downtrend on Amazon since last year at this point, right? So crucial area coming up now. If the bulls cannot play defense in this area and start coming back down to these 124 lows, It's not going to look pretty on the weekly here, but if we do come down into this sweet spot, 120 down to 110, I will definitely be a buyer of Amazon. We will see what happens to earnings. I need them to protect this area before earnings, guys. I think earnings should be good. So if we can protect this area, potentially move sideways, we may just see that rally to the upside should they perform very good on their earnings date. But as of now, guys, need the bulls to play defense and keep these daily uptrends and avoid potential weekly flushes. Now, Google, let me get some coffee. Google coming down as well, 1.21% to the downside here. So Google, one of our lead bulls, challenging our support area, guys. Moving averages, previous support between these two yellow lines, right? So what you don't want to see is Google flush this most recent low here, 138.09. Flush this, you get into a daily downtrend. At that point, however, you will just be in weekly consolidation. Anything above 128.50 will just be a weekly higher low. So Google and Meta, one of our only our two names that are still in weekly uptrends. The rest are in weekly downtrends, and we're looking for reversal. Google's still in a weekly uptrend here, right? So if we do lose this level, all is not lost. You will have a daily downtrend, but so much space on this weekly push that we're just going to be looking for a weekly higher low. Target these moving averages, potentially 135, right? So a lot of space on Google. I like it. We'll see how it goes here. Obviously, Google can't do it on its own. It does have earnings next, pretty much Tuesday here, so should be soon. I'd like to see them consolidate here in the higher areas. I think Google's going to have a pretty good quarter as well. So we'll see if they can get the job done here, guys. Now, Meta. Moving down to Meta. Meta also not able to do things on its own, guys. Down 2.17% today. So keep an eye on this 312 level. Flush 312. It will be a daily downtrend. That is not all that bad, guys, because once again, the weekly is in an uptrend and you've created a lot of space. Your level to watch out for is 289. So anything above 289, if we get a daily downtrend and the weekly starts pulling back, anything above 289 is for a higher low for potential weekly uptrend continuation. Meta as well with earnings next Wednesday here. So I would like them to consolidate, not give back too much of this move before earnings here to protect their gains and really set us up nicely for a potential beat on earnings. Q3 is usually a good quarter for Meta here. So I'm expecting good things out of them. We will see if big tech next week can save the markets. But so far, Google and Meta in weekly uptrends. So they do still have some space to pull back here. But not a very good day on Meta as a whole. We will see, can they hold this? And obviously, if we continue to the upside, well then, all's well that ends well. Microsoft down the least today, 0.69% as a matter of fact, protecting its gains fairly well, guys. Consolidating at the top area here in the 330 range. Microsoft as well with earnings next Tuesday, crucial. Daily uptrend, we're protecting it here, bouncing off the moving averages. The weekly, we are looking for your weekly trend reversal here. So next week on earnings is crucial. If they beat, we will negate this weekly downtrend and we will engulf this most recent move. That ends the weekly downtrend. Then they'll have a ton of space, guys, to potentially set a weekly new uptrend here. Your most important level for me right now is 310 on Microsoft, right? So I want them to consolidate the most here possible before next Tuesday, not lose too much of this move here and really stay up here, because if they beat, they are going to be able to smash this previous level right here around your 340 level and really reverse this. And that would be very bullish for Microsoft indeed. It would pretty much put an end to this monthly consolidation as well here. So keep a close eye on that for Microsoft. Next earnings on Tuesday. Can't do too much technical analysis because the earnings on all big tech is pretty much next week. Now let's move down to NVIDIA. NVIDIA not having a very good week, is it? So you can see NVIDIA from the tops here, pretty much since the top of last Thursday, we are down pretty much 12%. Semiconductors not doing too well at all. Crucial area is coming up once again, guys. This 404 area is the most crucial area in my opinion. Why? Because if you lose this, you set a weekly downtrend here. 400 is crucial. It is also your monthly support, right? So if we come down too hard into this area, guys, it's not going to look good for further continuation for NVIDIA to the upside here. Now, losing your daily uptrend convincingly. So now the bears have an opportunity to set a lower high here and potentially flush into a daily downtrend. If they get the daily downtrend, guys, watch out. You are looking to the weekly, and then it all becomes a question of 404. Lose 404. You set the weekly downtrend. NVIDIA has not had a weekly downtrend since last September and October, okay? Keep a close eye on that for NVIDIA. Those are the crucial levels. If you want bulls to play defense, well, they're going to have to bounce a heck of a lot here and reset a new daily uptrend. Now let's move down to our three last ones, guys. Tesla, we've already pretty much briefly done for earnings, but we'll run over them once again here. So Tesla down tremendously in the after hours here, down to 232. So let's just highlight this on the charts right now where it is, right around 233, right here. Right here, your 200-day moving average here. So unfortunately, Tesla losing your daily uptrend at this point. So daily downtrend on Tesla. Look out to the weekly. It is also a weekly downtrend as well, right? Lower 230s. If you crack this 235, you were in a weekly downtrend. Well, weekly downtrend is confirmed. If the weekly downtrend confirms, zoom out to the monthly, still in monthly consolidation. This is exactly like AMD. Exactly like AMD. The good thing is that they have a lot of space to work with here. You have your monthly moving averages down in the 220s, my sweet spot box, which is previous resistance, now support, right? And anything above 155 is just looking for a monthly higher low here. Tesla being plagued by lower profit margins and lower deliveries here. So no, and by Elon's lack of positivity on the call here. So we will see if they can reverse this. I'm expecting some support between the 230 all the way down to pretty much 200 level. So we will see. Need to wait at this point. It's earnings. It's fresh. Need to wait for the bottoming process here, but the bears are in short-term control here. They have regained the daily downtrend at this point. They have regained the weekly downtrend as well. So now we must wait for the bottoming process. We will need to eventually set a daily uptrend, and then you will know that your weekly bottom is in. So need to be patient on Tesla, but not very positive after today, that's for sure. Now let's move on to our two last ones. Palantir doing, not too bad. They did have an amazing day yesterday, which kind of compensated for today, but Palantir not able to push out as well, right? So still looking for this daily bull flag here to play out. But if you lose 1670, guys, it will be a daily downtrend. That's okay. Palantir has so much space, daily uptrend, maybe daily downtrend. If you get the daily downtrend, that's fine. Why? Weekly uptrend. So much space was created. Anything above 1390 is your weekly higher low. So you do have a nice area down here of previous resistance, which will now be previous support. You have your moving average as well, and you have a lot of space to work with here. So not too nervous for Palantir. Need to see, can they push higher and break 1839 and continue this daily uptrend, or will the bulls roll it over and potentially be in for weekly consolidation? If they are, not too nervous, a lot of space to work with on Palantir here. Palantir with earnings only 2nd of November. And lastly, PayPal once again falling apart and can't beat the market. Unfortunately, PayPal, right? If the market's red, PayPal will most likely be red unless they have outstanding company news. So we are once again challenging our 55.50 lows down here. Daily downtrend is pretty much underway. Your weekly downtrend simply continues at this point. Poor PayPal, can't catch a bid. What have I been saying for the longest time? I need to see a daily uptrend reversal. Until I see the daily uptrend reversal, guys, nobody knows where this thing is pretty much going to stop. It is coming down into the lower end of my sweet spot here. So if we do drop further into the lower 50s, I will be writing a few options here to try and reduce my average cost, which is up here in the mid 60s here, and capture some premium if I can. At least it's not dropping too much, right? The market's been dropping a lot, but PayPal has kind of remained between this $55 and $58 range. But eventually I need to see the bulls set a daily uptrend here, but they just have not been able to do it. So bears in full control of PayPal at this point, even though PayPal is at a very attractive valuation. So that's pretty much it that I had for today, guys, on the video here. I hope you enjoyed the video. So just keep in mind, guys, the moral of the story now is that since we've lost our daily uptrends at this point, it's up to the bulls once again to prove to us that they can play defense, set a weekly higher low on everything. You saw all the tech names that I ran through and all the indexes is the same. We're in a weekly downtrend. We're looking to reverse the weekly downtrend. We were looking, how high can the daily uptrends get us? That means how high can the weekly bounce be? And the bounce was good on some, but not good enough on others. We will see, can the bulls play defense and reset us into a weekly uptrend into the end of the year? Or we will continue to roll over. Jerome Powell talking tomorrow. So we're going to keep an eye on that. Hopefully he is dovish. So guys, that's pretty much it. Hope you enjoyed the video. Hope you're not too bearish as well. Once again, I'll reiterate, great opportunity to be buying as the next 2-3 months, in my opinion, will be very, very, very bullish once we get this negativity out the market, once yields peak out, once the Fed hits terminal rates, guys. That's it. That's all we're waiting for, right? So we're so close. So don't give up now. 2024 is going to be a beautiful year. Don't believe the recession narratives that you see. It will be a pretty shallow recession, in my opinion here, especially when the Fed starts bringing down rates. They may even need to turn the money printer on back again here, guys. So if you did like the video, guys, consider dropping a like. It really helps me out for the algorithm. And as always, consider subscribing to the channel if you're new. We love to have you here. Thank you so much once again for 400 subscribers. I really appreciate it, guys. I really do. And as always, if you have any questions, macro, option, stocks, leave them down in the comments and I'll be happy to answer you. So take care. See you guys tomorrow and peace.